So the 15-minute video I just recorded, the most important step, if you guys ever make YouTube videos, there's one thing you should do at the beginning, and that's make sure your microphone's turned on. It's probably a smart thing to do, not something that I would think of, being retarded and all, but so that was a waste of time. It was a really good one too. I wasn't planning on even doing a video or a second live stream because nothing's really changed. But my key trade is a really good teachable moment. And I figured I could do a quick video on it. So for those who saw my live stream, I said this is a high-risk trade. I got in right here. And I set my stop loss 2.5% below my entry. 55 EMA. Top of the cloud. That's 2 of my IchEMA dynamic supports. The next of my IchEMA dynamic supports here would be the 99 EMA. Held like an absolute boss. 55 big bounce here, right here, right? 55 big bounce here, 55 support here. It finally fails. What happens? The 99 EMA is a powerhouse support, causes an immediate rebound. What happens here? 55 EMA and the top of the cloud are holding really strong. They fail very briefly and it dips. What holds? The 99 EMA. Now, some people might take a loss on this trade like I did. I lost 2.5% on this trade, and then their next instinct would be, well, next time I'll set my stop loss, 4% below my entry, because if I put my stop loss down here, it would have been below that other support, right? That other IchEMA support, and that stop loss wouldn't have gotten triggered because it would have bounced right off that support. Some trades that can work out. Some trades you might have the 55, the 99, and the 222 EMA all within that stop loss range between your entry and your stop loss. Sometimes that's not the case. And in this case, I decided I'm going to enter what I consider to be a high-risk trade. The entire market is sort of iffy, and a lot of things are correcting. I'm confident there's going to be a bounce and a breakout, but I don't want to go and risk 4, 5, 6% on a short-term trade. Now, a lot of the time, most of the time when I get into trades like this, like I did at the beginning of Key here, along with a much earlier entry on Key, because I made a 10x on Key, pretty much, this entire run up. Check this out. This whole run, right? 214%, big pump on that. I sold, I think, for like 180%. Got in again here, surgical entry, 91% breakout. I've had some really great trades on Key. Not a 10x, but you get the point. And as I get into those trades over time, I accumulate a longer-term position. So now at this point, this was purely a short-term trade. If it was a short-term trade where I also was making a longer-term trade where I might have a stop loss 5 to 10% below my entry, and sometimes I don't have any stop loss at all on these longer-term investments because I'm confident long-term. Short of an entire market collapse, it's not coming down. It's going to continue up. We are hyper bullish, right? So if I had gotten into a longer-term trade here, I would have had like a short-term trade with a tight stop loss of 1.5 to 2.5%. And then I also would have gotten a second position where my stop loss was below the bottom of the cloud. So it has all my key IchEMA dynamic supports. My IchEMA model includes the 55 EMA, the top of the cloud, the 99 EMA, then the bottom of the cloud. And finally the 222 EMA down here. But I wouldn't have placed my stop loss that far down. It would have been down below the bottom of the cloud, right down here. 5.5 to 6% below my entry would have been a great way to enter this trade as a longer-term position. I chose to only enter a short-term trade, and I lost 2.5%, but a couple takeaways. One, it's exactly what I expected to happen. I accepted that that was a very realistic possibility when I got into it, so I'm not mad about it. I accept the fact that I got stopped out on that trade. I still am doing very well on my long-term position that I've built up on Key because I've been incredibly accurate on my Key models so far. Even this time, that's the final positive takeaway. My model was incredibly precise. I shouldn't say incredibly precise, but it was impressive. The level to which I was able to predict what would happen here so far is I even predicted the fact that I would probably get stopped out and it would probably dip down before breaking out, but I called the pump essentially, right? And my model held. The only time that my support structure here that I was using failed, my main secondary support, the 99 EMA, held perfectly and resulted in that immediate pump. So for people who are in the group who maybe followed my lead and said, oh, that does look good, I'm going to get into that trade too. The other lesson that I teach to everybody in the group is we all have a different risk profile. If I get into a trade and I set my stop loss at 2.5% below my entry as a short-term trade, and I'm not building a longer-term position, that's all I'm going to do. But maybe some of the guys did get into a longer-term position, and they are still in this trade, and they are still winning, not winning, still making a profit on this trade because of this breakout. So that's why I wanted to do the update. I'm still very bullish. I think this breakout is going to go all the way back up to a penny, the prior top. Once it hits that double top, it'll correct back down. But long term, if it's a long-term position, I'm going to be holding mine. You do what you want to do, but I'm continuing to hold key long term. I believe we go much higher than we are now. But if you were in this for the short term, you should be aware there's a very high probability when it gets to a penny, it's going to reject and correct down a decent bit. It could break through a penny, but I think very likely the strength that this resistance held right here, I feel like a local double top is very much in the cards. Let me just run back in time. I want to see the last time we got up to a penny, if that was also strong resistance. It really wasn't around here, but recently it is. That's why I said short term. Actually, I guess it was here. There were a couple wicks above it, but these were, look at this, 3 in a row. Big rejection, big rejection, big rejection. So it was trading above a penny. Once it got below, it made one attempt here. It got rejected right at 1 cent. It made another pump, trying to get through, another rejection, and then a third time where we had those wicks that broke up, and then a really big rejection from there. So even going back to that point, that penny is a pretty strong resistance. So I think there's going to be some decent resistance there. If it's a short-term trade and you want to walk away, you could potentially sell up at that area and walk away with a 12-13% profit. So that could be a great trade. But again, if you're in this trade and you're holding longer term, you can hold with me if you want, and I'm going to keep holding. I think that we have quite a ways to go in key. So again, stopped out on my short-term trade, but really good teachable moment. Figured I would share my thoughts on that and explain what I was thinking. I also have this entry on fill. Now, this is a very low-risk trade. My stop loss is only 1.2% below my entry. I also explained in the live stream my thinking on this. I could very easily justify placing my stop loss below that 222 EMA. Less than 3% risk still. It's not terrible. But this is a surgical trade. I am using this trend line support. I identified a very strong trend line that's been holding this entire time. My IchEMA dynamics have been holding well and running just along the path of this support. I think we are going to make a bounce on this one as well. So I very well may recoup my loss from key on this trade. We'll see. Well, you can see we're getting a lot of resistance from the top of the cloud. That's one of my IchEMA dynamics, right? So once we're in the cloud, breaking back out of the cloud is tough. It takes numerous attempts because that top of the cloud is going to be a strong resistance. 1, 2, 3, 4, really 1, 2, 3 attempts wicking through a little bit. This candle looks pretty green. If this can push through and get up to like $43.20, I think we hit a new high, well up into the high 44s, into the 45s on FIL at a bare minimum. So I'm really bullish on this trade still. That's the only newer trade that I opened. But I thought it was good to at least share key because of how great of a learning opportunity that was, and how perfectly my model worked. You know, even when if I lose money on a trade and my model works this well, I'm just really, really proud of my model because I put a lot of time into developing it. So that's it. That's all for the update right now. As far as BTC, it's correcting exactly when we thought it would. Got the double top. If you saw my other video, I had 58K as the top of wave 3, so I was expecting a bigger correction. And I've since restructured my model, so my 1618 extension wave 3 target is now roughly 62K. So we still have to break through that 58K barrier. That's a strong resistance there. Still is. Much like the resistance I just showed you on FIL at the top of the cloud, that's going to be a strong resistance. Same thing with that 1 penny level on key, strong resistance. It's going to attempt a couple times, and it's going to get rejected and come back down. But on that attempt where it finally breaks through that resistance level, you can get an explosive breakout, because what a resistance level is a very large sell wall. If you know anything about order books, great. If you don't, do some research or work with me to learn more. But with order books, you can look at the order books and see the orders that people have placed on Bitcoin. People are trying to buy 1 Bitcoin for X dollars and sell their Bitcoin for X dollars. Well, if somebody is selling 500 Bitcoin at $58,000, then no matter how many people are going on the exchanges trying to buy Bitcoin, that guy's selling, I don't know what I just said the example, 500, right? If everybody's going on buying 0.0001 Bitcoin like most people would do, or maybe 0.2, maybe even 1 or 2 Bitcoin. But if some guy is dumping 500 Bitcoin and has a big order to sell that 500 at 58K, every time someone's buying Bitcoin, they're buying into that sell order. So there's a big wall. His sell order is a huge wall that is blocking the price from getting any higher. And you can see that on the order books. That's what a resistance is. A support is the opposite, right? A big buy order that's propping the price up. So when that resistance finally goes away and you break through it, what's that? That essentially means, if you think about what's going on behind the scenes, and this is why understanding concepts like what order books are and understanding the correlation between what you're seeing on the order books and what you're seeing on the charts, if you have that full picture, it greatly adds to your ability to understand what's going on and what market forces are at play. Because once you remove that barrier, once you remove that big sell order, and all those people are buying, they're no longer buying into that wall. That wall's now been knocked down. So all those buy orders can potentially shoot the price up very aggressively. And that's why a lot of the times you'll see a double top or a triple top and all these rejections from a key resistance, and finally you break through and it's just an explosive breakout. So that could potentially be in the cards. We could break right through to 62K if we get above that 58K resistance. So we want to keep an eye out on that. I'm crashing now, but we'll see where we stand in the morning. And if we haven't made any sort of big moves by then, maybe we'll start seeing some of the signs and we can get a better idea of what's going to play out during the day. I will post an update when I got more info for you. And I guess in the meantime, we'll see if I'm right or wrong. Let's hope for the former.